What's up, guys? Welcome back. This is part one of the wave principle. Now that you guys are feeling a little bit more comfortable with the Ichimoku, I decided to scratch the fourth video and just start with wave analysis because I think it all kind of translates together very nicely. And in general, I mean, this is the bread and butter. This is the main course. As traders, this is how we eat. The wave principle dominates everything else out there. I mean, I could be biased. I don't know. I've just been using it for a long time and just simply amazed by the results it gives and the predictive power that's, just in a couple waves. You count 1, 2, 3, 4, 5, you got a wave. 1, 2, 3 down, you got another wave. Obviously, it's easier said than done, and it does get a little bit complex. But this first video, we're just going to cover that basic wave structure. And that way you guys can go out into the charts and start plotting, some basic waves. And with the Ichimoku, you can start seeing kind of the market behavior and how everything's moving and get a better idea of the market structure, what kind of wave structures, potentially forming or has already formed. It's very complex, but hang with me, guys. I'm going to try to make it easy for you. So let's go ahead and get started here. This beautiful picture is of Ralph Elliott. He's credited for kind of developing the wave principle of Elliott wave theory, whatever you want to call it. So in 30s, 20s, I don't know what year, I think it was the 30s, he discovered stock prices kind of, trend in reverse in some kind of recognizable pattern. It wasn't necessarily that it repeated, it wasn't like a twin brother. It was more or less like a cousin or something. It's kind of the same in essence, but when you dig down into it, there's a little bit of difference there. And that's what he kind of noticed. He went on to just destroy analysis on the Dow Jones, and through that he found these 5 patterns or waves that kind of occur in the market. And then from there he was able to link them to larger patterns. So you have waves inside of waves inside of waves. I don't know, I might have said that a couple of times in previous videos, but that's how waves are made. If you have a 5 wave structure up, then most likely that's going to be composed of even more waves or sub waves, a subdivision of waves, something around that line of thinking. And that's kind of the foundation of what Elliott found and what Elliott wave theory is really all about. It's waves inside of waves, and it's very good at forecasting future price. But at the same time, whenever Elliott, or even in general, whenever wave theory was developed, it was more to learn the market behavior so that you can be able to tell when a bull run could occur / end, and when a new one would begin. So that's and it just kind of developed from there into being like one of the best indicators to predict the market and predict the current market behavior through other relations that we're going to go through in this series. It's very complex, but this is kind of just the broad overview, I guess, of it and what we can look for. But just remember, this is more of a market behavior tool than it is a forecasting tool, but it just works so great to forecast as well that your mind is just going to blow off your head whenever you guys start looking at these. So as Elliott, slowly devised this principle, there are some guidelines that he ended up finding, and that was that the wave principle is governed by human nature. To the very core concept, prices and fluctuations are down to kind of human psychology, mass psychology, and it can be expressed through repetitive patterns that yield the predictive powers, basically, and that's the forecasting essence of it. So that current move up to the 20K in Bitcoin was mainly caused by, mass psychology. You had just Bitcoin getting blasted on the news, on social media, on whatever else it was. And that's kind of your sell the news, buy the rumor. Once you see it on the news, you can expect kind of that impulse wave to happen and then some type of retrace. And that's pretty much exactly what happened. Now, with that being said, that is slightly different than, say, news that you'd hear like when Mt. Gox got shut down and it just caused the price to take a shit, or when the Silk Road got closed down and Bitcoin just took a shit. That's kind of what this second point is saying. Like the news, that kind of news doesn't really matter. When you're analyzing your charts, the news of the 20K run that I just mentioned, that's kind of built into the chart. And if you go back and analyze that whole wave, you can see that it was already beginning to start, and this just kind of pushed it up through that price area. So I mean, just remember that the path of the price is not a product of news, but of human nature, and that's the difference I want you guys to know. Like you have this difference of news between Mt. Gox shutting down versus Bitcoin hitting 20K and it just being plastered all over social media. There's two different types there, but what he's basically saying is, it's kind of everything is built into the pattern itself. That's just the point. I want you guys to really understand that point, because the news, you should know, as The Rock says, it doesn't matter if there's news or not. Follow the wave analysis. So with that being said, we will start now into the basic 5-wave pattern structure that Elliott found. So in order for the market to progress, it go upwards or downwards, it has to take the form of the 5 waves. And that's the basic foundation of what Elliott found. And you can see here on the chart, we have 1, 2, 3, 4, 5. So this is a 5-wave completed structure. I guess you could say a 1 leg up, is what sometimes I like to call it. So what do we see here? We see wave 1, wave 3, and wave 5. They're all, our impulse or directional waves that are going currently up. So we have waves 2 and 4 that are retrace waves in essence. And what Elliott said is you need waves 2 and 4 as, kind of a requisite for the overall direction, of the movement to occur, be it either up or down. So now if we dig even further to this 5-wave pattern that Elliott found, basically he noted that there's 3, consistent guidelines or aspects that make a 5-wave. So if you find some other wave that doesn't adhere to these 3 guidelines, then it's not a true 5-wave, structure. And now I have seen, things come down and kind of violate wave number 3, but it's almost so quick that, you can kind of count it as a 5-wave anyways. But let's go through this. So we see, the 5 waves here. We have guideline 1, wave 2 never moves beyond wave 1. So we see the wave 1 goes up. Now wave 2, it can retrace, but as long as it doesn't retrace 100% of wave 1, then we're okay. So then guideline 2 says that wave 3 is never the shortest wave. So in order to have a true 5-wave, we want that 3rd wave to be the longest. It's just the general guideline that you want to look for. And then wave 4, you see that it never enters the price zone of wave 1. So what that means is, as wave 4 is retracing, you don't want it to, come down and close, under the price of this wave 1 if you draw a straight line over here. Now that's kind of the basic structure of your 5 waves. So this leads into the 2 types of wave development. We have a motive wave and a corrective wave. In our current picture, we can see, waves 1, 3, and 5 are our motive waves, and then waves 2 and 4 are the corrective waves. Now, what I mean by 5 waves total and 3 waves total is usually in our motive wave, we're going to have a 5-wave count. And then our corrective wave is going to have 3 subdivisional waves in there. Now, they can be made of, many other waves, but our basic structure that I want you guys to think about is 5-3. That leads us to our next picture here, which kind of shows a 1-2 pattern completed here. So we have our first wave up, number 2 comes down, 3, 4, and 5, and then that completes our first wave. So our motive wave is 5 waves, and then our corrective wave, which we lettered ABC here, is A, B, C, and that's 3 waves down. So this is the basic, structure of a motive and a corrective wave together. And then as you can see, the numbers 1 and 2 on top here, it is the bigger overall picture of the wave itself. So with that in mind, just remember at any time the market can be identified as being somewhere in a 5-wave structure or 5-wave pattern. It just depends on what kind of degree that we're looking at, and it's really up to us to kind of find that out. And that's what we're going to use multiple time frame analysis for as well, to get us, the bigger picture, just like we did in Ichimoku. It's the same, process here. So if we put that in context, this next slide I'll show you is an even bigger wave degree with certain smaller waves inside of there. Don't let this intimidate you too much. If we dig in here, just pay attention. You see the 1, 2, 3, 4, 5 in parentheses, and then we have ABC corrections in parentheses. Now, if you forget about all the other squiggly lines in between, this is still going to be your basic 5-wave up, 3-wave down. So that gives you the 8 total waves. And then if you look at the 1 and 2 that are circled, those are our larger degree waves. So we have, a 5-wave, a 3-wave correction. So that's 1, 2, and then another 5-wave, 3-wave correction. That's 3 and 4, and then another 5-wave. Now that ends our whole 1 leg up, which is circled by the 1, and then we have ABC down. And you can see there's other waves inside of this ABC count. And that's kind of some of the patterns that Elliott, slowly discovered. We have zigzags, you have diagonals, you have triangles. And it just depends on what kind of wave count is inside that correction to really specify what type of correction it is. So this is, again, this is just a basic kind of overlay of what we're going to be getting into in this You just need to know that each wave is part of a larger wave. And if we go even deeper to this next slide, this one is just crazy. This is a full market cycle right here of all the waves that you could possibly encounter. So just from the overall picture, you see the motive wave. That's the waves, our impulse wave, and that's shown by the numbers that are circled. So we have 1, 2, 3, 4, 5. That gives us our one motive wave up, which is this I up here, the Roman numeral, and then we have a correction that's we know it's 3 waves. Now, what 3 waves it takes, that's kind of where our other analysis is going to come in later videos. We'll be able to start picking out some of these structures, but the basic structure is A, B, C down, and that completes the Roman numeral number 2 over here. And then in between here, just the wave counts of each one of these, and a complete market cycle is 144 waves, and that'll give you kind of your 1, 2, and then as it goes up to 3 and 4, etc., it'll expand onto that. But just again, the general concept: waves inside of waves, 5, 3, 5, 3, etc. So I'm going to go back to the other slide just for a key concept as far as corrective patterns, motive waves, etc. We can have a motive wave go down. As you see in this ABC picture, we have a 5 wave, a 3 wave, and a 5 wave. So that's considered a motive wave just in the downward direction. And then our B wave here, which is the ABC retrace, would be our corrective wave in this structure. So you guys just to understand and differentiate that motive waves don't always have to go up. We have the motive waves that also go down, and in this case, it's to complete our second wave. So that's kind of what we want to look for, is these completions of retrace patterns, and we can double it up with our Fibonacci level, and we can even triple it up with our Ichimoku indicator. So from there, the underlying tendency of the wave principle is action in the same direction of the larger trend is your 5 wave motive, and then the reaction against the larger trend is your correction, as shown in this picture. And that's kind of the full cycle of a wave is what we're looking for. As long as the progress continues, the process, of greater degrees of waves continues as well, and it could, it could theoretically go on forever, but that's not what we're really concerned with right now. So some of you just might be thinking, why is it 5-3? Does it move in any other way? Is there some other 2-3, 18, whatever? You know what? It doesn't matter why it moves in 5-3. It just does. No, I'm kidding. Elliott, he really had no idea, and he didn't really want to speculate on that. That's just what he observed and kind of based his principle off of. So if we think about it, we can kind of come up with why, this is the pattern. If we have one wave down, let me switch over here to paint just for some easy reference here. Right, so if we have one wave down, that's not fluctuating. If we have another wave, 1, 2, that's, it's kind of, I guess you could say, but that, fluctuation should be this, right? So we need a minimum of 3 waves to make anything fluctuate. And then to progress, we need even more than that, right? Which are 3, 4, 5. So in order for us to, make any kind of progression in one direction, we need to make that 5 wave, kind of minimum, 1, 2, 3, 4, 5, right? 1, 2, 3, 4, 5. These being the 3 retraces or whatnot, 5-3 pattern, right? Because everything's wave inside of a wave. This kind of leads to the most efficient path of anything. In all of nature, as I studied physics, you'll find that out as well. Like, nature just loves to follow the path of least resistance. And that's kind of the same thing in this wave that Elliott discovered, these 5-3 patterns. And then again, this is a general guideline. As we go on, you'll see that, it doesn't always obey this 5-3. There are some other crazy things that can happen. You can get extensions that make it, a 7 wave or a 9 wave or something crazy like that. But the general guideline is most patterns, or waves are going to follow this 5-3 principle in order to get any kind of progression. Because like I said, if it's not going in a 5-3 pattern, then you're not in, this progressive wave, I suppose, or, the price is not going to go up and down. It might just stay stagnant. Like, it looks like it's going up and down over here, but it's really just up, down, up, and it's back at the same starting point. So that's why the 5-3 is kind of important here to, recognize and start looking in the patterns in the charts itself for you guys, and you'll start seeing it as well. Some examples on the charts that make up some Elliott waves that I found recently. And, you guys can go out and start practicing as well and try to, understand just the movement. Like I said, the main thing of wave analysis is, the market behavior. That's what you guys want to understand from this. When it runs up to 5 waves, you guys are now going to be able to tell, oh, this is going to retrace, maybe some type of ABC pattern down. I don't know what kind of ABC pattern, but the overall structure will be, that 3-wave correction. And then from there, you want to, jump in or use your fib levels and so forth. But that's for a later topic. This is just kind of the basic intro to get you guys introduced into, the basic foundation of each wave and what they're made of and kind of what we're looking for. And then from there, we can develop and branch out into, the other patterns that he found, because they get pretty crazy. If we start over here, let me switch my charts out. All right, so this is the Tron chart for the most recent move up. But even before that, I had some wave counts going on just to see, get a general idea what was going on. You can see from the Roman numerals in white, that's kind of our smaller wave. So we have it, going up, and this kind of creates our first wave here. And then we can expect some type of retrace, and that's noted by the ABC. Now with this one, I think I may have labeled this wrong, because this looks like a bit of a longer correction, and C would kind of end here. But that's not important, just for the visuals here. And then after our correction, we can just label that as wave 2, right? And then our longest and strongest would be wave 3, which is up here for wave 3. Now we're in this current retrace. And as long as we don't, breach this, let me get rid of this line here. As long as we don't breach this 433 line, our 5-wave structure is still intact. And we can then expect, hopefully, the 5th wave up to some further extension, which I haven't really plotted yet. But I did catch, this almost this whole 3rd and 5th wave here. It was posted in my Discord. I was aiming for 75%. I forget exactly where that was. I think it might have been a 16, 18 fib. But I mean, this thing just shot to like 200%. So that's just sometimes you get lucky, when these things run up like crazy. But this, that's just an example. And then if we go over to Bitcoin real quick, we can do a quick analysis here. This is a correction that's just ugly. This is still in, a corrective phase. You can see the ABC structure down, and you think it could end there, which it can, but as we develop in, like I said, these corrective patterns can get pretty hairy. This is a combination pattern. We have the ABC down, and then this WXY is our second pattern that we're looking at. So I don't know right now where E is going to end. It does look kind of good. If you see, we have a TK cross in the cloud here. We have the Kumo twist over here. It's just tough, though. It's tough to say if we're going to stop here or if we're, going to continue down to make this wave down to here. And then we'll, try to push back up. So I don't know. This is, but, just something fun. You guys can also put this on your chart and kind of follow along and see, which waves develop and what happens. So I'm going to stop here and leave you guys with that information. 5-3, that's the most important part. 1, 2, 3, 4, 5 up, ABC down for a total of 8 waves. That makes your 1-2 leg, right? And then you go out in larger time frames to get your context. What did that wave make? Is it in a bigger correction or pattern, or is it in an impulse move? It's all it does get pretty crazy because you have to take everything into consideration: the daily chart, the 4-hour chart, the 1-hour chart. Depending on what you're trying to do. If you're scalping on the 15-minute chart, you probably would love to know what the overall picture is, because you can basically catch your 3rd wave in a lot of those on the 15-minute chart. But how high does it go? You don't know. So that's that's just something you guys want to check out on all your charts and just start going out and putting numbers on and see what you can come up with. Get a better idea of how the market behaves and why it behaves like that. 5-3, 5-3. Just pay attention to that. And then the next videos we'll be getting in hardcore because it gets pretty deep. One last thing I want to remind you guys about: check the link below to get into the Discord. I think there's some great information here. Come in, stop by, see me, ask any kind of questions you want. I will try to answer them. If I don't know it, I'll find it out for you. That's just my human nature. I love to dig into things, and this is why analysis is perfect for me right now. And yeah, just stop on in, check it out. And as always, any questions, let me know.